Okay, let's unpack this. Imagine you're a major pharmaceutical company looking to expand, to truly make a global footprint. Where do you look?
Hmm.
What kind of deal do you make? Today, we're taking a deep dive into exactly that, a significant strategic move by Natco Pharma.
That's right.
We're zeroing in on their recent offer to acquire a substantial stake in South Africa-based Adcock Ingram.
And our mission today really is to cut through the complexity of all the source material out there. We want to give you the essential insights, the nuggets you need to be truly well-informed about this.
Yeah, about this whole strategic pharmaceutical development.
There's more than just the figures, you know. We'll try and uncover the deeper implications.
Absolutely. And we're going to unpack the financial data, the strategic thinking behind it, and really uncover what this move could truly mean for Natco's future trajectory.
Yeah.
Like you said, this isn't just a simple business deal. It feels like a fascinating window into how global pharma companies are diversifying, evolving their strategies in, well, a very dynamic landscape.
Definitely dynamic.
So let's kick things off with the nuts and bolts of the acquisition. What are the core details of this offer?
Okay, so Natco has put forward an offer to acquire a 35.75% stake in Adcock Ingram.
Right.
The offer stands at approximately INR 20 billion.
20 billion INR. And how does that break down per share?
If you break that down, it's R75 per share, the South African rand, or roughly USD 4.271 per share.
Okay. And that values the whole company, Adcock, at?
This proposed deal values Adcock at approximately USD 632 million. And when you look at the metrics, that comes out to about 1.12 times their revenue, and maybe more importantly, 7.8 times their EBITDA.
7.8 times EBITDA. Now, those multiples, are they high, low? What's the read there?
Well, generally they're considered fair. Perhaps even you could argue a bit conservative for a profitable pharma company of Adcock's scale.
Right. So it suggests Natco isn't really overpaying here?
Doesn't look like it, no. And the expectation is for this deal to close within, say, 3 to 4 months.
Okay, fairly quick then.
Relatively.
Yeah.
But as always, it's pending those crucial legal approvals, right? You've got FEMA compliance, that's India's Foreign Exchange Management Act, needs approval from the RBI, the Reserve Bank of India, and then South Africa's Takeover Regulation Panel, the TRP, they need to approve it too.
Got it. So standard regulatory hurdles.
Exactly. What's particularly interesting here, I think, are the immediate structural implications for Adcock Ingram itself.
Okay, what changes for them?
Well, post-acquisition, Adcock will actually transition into a private company.
Oh, really? So delisting.
Yeah. And Bidvest, another key entity, they'll retain roughly a 65% stake.
Okay.
And interestingly, Natco will have the first right of refusal on that remaining share held by Bidvest.
First bibs if Bidvest wants to sell later.
Precisely. And critically, Natco will also secure 1/3 of the board seats.
1/3 control at the board level, that's significant.
It is. And here's a key financial detail for Natco itself. They will directly consolidate 35.75% of Adcock's profits into their own net profits.
Okay, explain that a bit. So it's not like adding Adcock's revenue line by line.
No, exactly. You won't see a line-by-line addition to Natco's P&L statement. Instead, it's a direct, sort of proportional boost right to their bottom line, their net profit.
Okay, so looking at these initial figures, my immediate thought is this a truly transformative deal for Natco, or maybe more a targeted strategic acquisition? What do these numbers tell us about the immediate impact on their earnings?
Well, the projections show this deal is immediately accretive for Natco.
Accretive, meaning it boosts earnings per share right away.
Yes, exactly. We're looking at a 7.9% EPS, earnings per share, accretion, and that's even after accounting for the interest income Natco might lose by spending the cash.
Wow, 7-9% jump right off the bat. That's pretty significant.
It is. It's almost like an instant financial win, suggesting they're not just expanding geographically, but maybe strategically plugging a potential financial gap with a deal that delivers quick returns.
Especially maybe given some broader challenges we might touch on later.
Could be. Now, this projection is based on certain assumptions, of course. Adcock's revenue is growing by about 5% to USD 563 million.
Okay.
And maintaining a 15% EBITDA margin in their financial year, 2027. And the consolidation date, for calculation purposes, is assumed to be December 1st, 2025.
Right. This is where the layers really start to peel back, I think. Why would Natco, a company with such a strong India business, focused on oncology and, a pretty robust U.S. pipeline, why make such a big move into South Africa?
Yeah, it's a great question.
It feels like this acquisition isn't just about growth. It might also be about strategic defense, maybe finding some balance. Let's dig into that.
You really hit on the core of it there. The primary strategic rationale for Natco seems clear: diversification.
Away from the US,
Primarily, yes. They're looking to shift some of their reliance away from the U.S. market. This acquisition gives Natco direct and pretty robust access to the African
which
continent.
is a key emerging market, right?
Absolutely. So this isn't just about adding new revenue streams, though that's part of it. It's about bringing essential diversity to their core earnings
Hmm.
and significantly strengthening their geographical spread. That's especially important when other markets, like maybe the U.S. generics market, might be facing headwinds.
Makes sense. Spreading the risk.
Exactly. And there's another angle. Natco's real strength lies in its R&D, particularly in complex generics.
Right, they're known for that.
Think of it like having I don't know, a cutting-edge recipe book. But without access to the right kitchens or markets, it's just theoretical potential.
Okay.
This deal provides them the kitchen South Africa via Adcock to bring those recipes, those complex generics, to life in a new significant market.
Got it. So it's not just about getting a foothold. It's about making, 1 + 1 equal more than 2, right? What are the actual synergistic benefits they're expecting from this?
Absolutely. The synergy potential is key. We can detail two main types here, starting with revenue synergies.
Okay, how can they boost revenue together?
Well, Natco can introduce its strong product pipeline, including potentially cutting-edge products like semaglutide.
The weight loss drug component.
That's the one. Introduce that into Adcock's prescription business in South Africa. Now, that particular segment for Adcock has actually seen kind of sluggish growth recently due to competition.
So Natco can inject some new life there.
That seems to be the plan. Revitalize it with new high-potential offerings. They can also provide Adcock with access to other products from India, essentially expanding the product basket available in South Africa.
And Adcock's business is pretty broad already, isn't it?
It is quite diverse. You've got prescription drugs, which are over a third of their revenue, then OTC, over-the-counter stuff, about 26%, hospital supplies, 21%, and even consumer health goods at 17%.
Right.
But Natco's eyes seem firmly set on boosting that prescription, the RX segment.
And maybe beyond South Africa.
Definitely potential there. Expanding into other African countries where Adcock either previously had a presence or is currently active in neighboring regions seems like a logical next step.
Okay, so those are revenue synergies. What about costs?
Right, cost synergies. Adcock stands to benefit quite significantly, potentially, from Natco's manufacturing capabilities and their broader sourcing networks.
Leveraging Natco's scale and R&D strength for efficiency?
Precisely.
Yeah.
They can likely streamline production, maybe improve sourcing, and achieve better cost efficiencies. And there's another angle for Natco shareholders,
Oh, yeah.
an immediate perk, you could say. They gain access to Adcock's top 10 brands. These are described as household names in South Africa, each generating over USD 10 million in revenue.
Wow, so instant access to established, profitable brands.
That's a strong portfolio to tap into, for sure.
It's fascinating to think of Adcock Ingram, a company established way back in 1890, as a pharmacy.
Incredible history.
It's almost like a piece of pharmaceutical history now playing this pivotal role in a very modern global expansion strategy. So who exactly is Adcock Ingram today and, why them? Why were they the chosen partner for this?
Well, today, Adcock Ingram stands as the second largest private South African pharmaceutical company by market share.
Second largest private.
And what makes them pretty unique in South Africa is their comprehensive coverage across all market segments.
Right. You mentioned that prescription, OTC, hospital, consumer.
Exactly. That breadth is a significant advantage. Operationally, they run 3 facilities in South Africa, and they also hold a 49% stake in an Indian joint venture, which has 2 additional facilities.
So they already have a foot in India, too.
They do, and financially, in their most recent year, FY24, which runs July to June, for them, Adcock reported, USD 536 million in revenue.
Solid revenue.
Yeah, and a healthy 15% EBITDA margin, leading to about USD 45 million in PAT, profit after tax. So they're a well-established, profitable entity. Seems like a solid partner for this kind of strategic move.
Okay, that paints a clearer picture of Adcock. We've looked at the immediate financial impact, the strategic why behind this deal. Now, stepping back a bit, how does this Adcock Ingram acquisition fit into Natco's larger strategic mosaic? What does it signal for their long-term health and overall direction?
Right, the bigger picture. Well, Natco's existing strengths are indeed significant, as you mentioned earlier. They have a very strong India business, particularly focused on oncology.
Yes.
And they also have those niche high-value products in the U.S. market, like Gicopaxone, Grevlimid, G-Tamiflu. Often they partner with major global generic players for those.
Right. Complex generics where they excel.
Exactly. And their U.S. pipeline looks robust, too. They have first-to-file wins for drugs like Olaparib, semaglutide, and potentially erdafitinib.
And that first to file, or FTF status, that's a big deal in generics, isn't it?
Huge. It often grants a valuable period of market exclusivity, maybe 180 days, a significant competitive edge. Now, what's crucial to note financially is that Natco still has INR 15 billion in cash on hand after factoring in this Adcock transaction.
15 billion INR left over. Wow.
Yeah, and with more cash expected to accrue from their ongoing operations, this clearly indicates a strong balance sheet.
And maybe an appetite for more deals.
Exactly. It suggests an appetite for further M&A action to continue this diversification strategy. They likely aren't done expanding or adjusting their geographical footprint.
That all sounds incredibly positive. Strong core business, good pipeline, cash for more moves, and now this accretive deal in South Africa. So this brings up a key question. If this deal is so good and they have cash to spare, why is the overall analyst rating, or like the one we're looking at, still hold for Natco Pharma? What are the remaining challenges or headwinds that temper this optimistic outlook?
You've highlighted a critical point, and it really speaks to the complexities of the global pharma landscape, doesn't it? Despite this positive acquisition, there are key risks and headwinds that definitely temper the outlook.
Okay, like what specifically?
Well, Natco faces ongoing headwinds in its U.S. business. This includes higher price erosion in key products.
Price pressure, always a factor in generics.
Especially in generics, yes, and particularly impacting Grevlimid, which has been a big earner for them.
Oh, okay.
There's also just inherent uncertainty. Potential delays in product approvals and filings. The timelines for launching drugs from their U.S. pipeline could be unpredictable.
Right. FDA timelines and approvals are never guaranteed.
Never guaranteed. Plus, their agrochem segment has shown somewhat muted performance recently, and they are actively dealing with remediation efforts at their Kothur manufacturing plant.
Plant remediation? Okay, that can be costly and time-consuming.
It can. And then there are the financial projections for Natco itself. While the Adcock deal is immediately EPS accretive, which is great.
Yes.
It's important for you, for the listener, to look at Natco's own broader financial projections. They actually show significant revenue and, more worryingly, EPS declines forecast for FY26 and FY27.
Declines after the initial boost. By how much?
Well, for example, the projection shows EPS growth going from a positive 35.8% in FY25.
Strong growth.
Yes, but then dropping to minus 25.6% in FY26 and a further minus 64.1% in FY27.
Wow, those are steep drops. What's driving that? Is it the Revlimid erosion primarily?
That's likely a major factor, the erosion of key U.S. generics. It points to deeper underlying challenges in their existing core business. The Adcock acquisition definitely helps mitigate this. It buffers the earnings.
Diversification in action.
Exactly. But doesn't fully resolve those underlying pressures reflected in the forecasts for 26 and 27. And of course, with any international deal like this, there's always currency risk as an external factor. Fluctuations between the rupee, the rand, the dollar.
Always a factor.
Mm.
So putting it all together, while the South African deal brings clear benefits, strategic growth, immediate accretion, you can see why understanding the full context, including those existing challenges and the somewhat concerning longer-term financial projections, is crucial for a complete picture. It's definitely a nuanced story.
It really is. So just to briefly recap the key insights, Natco's strategic play here is clearly for diversification and market access in Africa, using Adcock Ingram as the vehicle. They're leveraging their strong R&D capabilities.
Right.
And the deal is projected to bring that immediate EPS accretion we talked about.
But as you've just laid out, it's a very dynamic situation. Despite this bold expansion, Natco faces these ongoing headwinds, particularly in the U.S., that really underscore the complexities of navigating the global pharmaceutical landscape today.
Absolutely.
So maybe a final thought for you to consider. How do companies like Natco balance these ambitious growth strategies, like this big acquisition, with managing persistent, maybe even worsening challenges in their core markets? What does that balancing act tell you about the future of global pharma? And perhaps what kind of moves might they, or companies like them, make next to keep that balance?
A lot to think about there.
Definitely. That's it for this deep dive.